Okay, everybody, welcome back. We're kind of freestyling it here today. As I mentioned, really in the first half hour, generally we'll go and see what kind of happened overnight. Usually be a little bit of movement and any economic reports that came out, what happened in the U.S. session. We do a quick flyby and we have the bias chart posted, pretty much already updated. Well, here's the deal. We had some big moves overnight, and we're going to jump into those. Some more people have come in online right now, so usually we'll have the bias chart, but we had such big moves that we needed to go on, I wouldn't say start from scratch, but like I said, the bias chart held up really well. This missed, and for some people who came in now, we just missed this by 2 pips in the 2 ticks in the U.S. session yesterday. The euro dollar missed this by 1 tick. Early before the FOMC minutes release. Same thing here with the cable, some awesome calls. Just, like I said, worked really well. This bias chart is, so what we're going to do right now is we're getting a pop here in gold. So we say we're going to jump all around. And so let's take a look at gold right now. LB says, super work. If time allows, can you can briefly explain why the dollar yen relates so inversely to the bonds? Thanks so much. Thanks so much for more. Yeah, let's do a quick look at the 2-hour charts real fast. I was going to look at the gold market. You can see here. You see, here's where the dollar yen went right to our bias pivot here. And yesterday, remember we had 32.56, came here right to the pip here. So let's go and we'll go and take a look. We want to keep an eye on this gold market that's starting to chip a little bit up in here. But the bonds are seeing nice reaction. So we're going to be, like I said, jumping all over the place. Usually we'll just do the majors for the first half hour, but we'll look at the euro, the gold, the bonds, and we'll be updating the bias chart. So here's what we had in the, let's take a look here at the euro. So there's our big bias pivot we've been talking about right here. And let's take a look here. Okay, so we've been talking about this. We actually covered this in the first half hour. And we covered it on 30 minutes. So now when you look at it on the 2-hour chart, and generally I'll look at my longer term outlooks are on a 2-hour chart versus, let's say, a 4-hour chart. And I mentioned this is yesterday, how the cash dollar, why I don't follow the cash dollar index so much, because, and we're talking about the dollar Swiss, but I said that the euro comprises 56% of the cash dollar index. So basically they trade inversely. So you see here, this bar here, which almost looks like a shooting star, but notice how the body finished in not at the very tip, and the same thing here being a hammer bottom. And so they trade almost inversely. Why I don't pay too much attention to the cash dollar index. And when I do look at things, I'll look at the dollar Swiss to give a little bit more additional flavor. So we talked about the significance of this 568, and you can see right where they ran out of gas, this 568. We're at the 534. The 534 in Asia, folks, it held it. And we dropped back. And then the market reasserted itself as we went into the very early hours into Europe. And then right here, we run out of gas at the 568, and we see a nice pullback. And we told you we had the 438 as a 38%. So let's take a look where resistance is going to go and be at this point. And I'm thinking is, as you roll into NFP tomorrow, things are going to probably quiet down a bit. So I'm thinking is, it's going to be limited. So you could say, well, resistance will be right here. If you want to stretch it a little bit, let's go and do that. Let's say resistance would come in right there with these touches right there. That'd be 589. Because if they want to overshoot it, they'll probably get past it and maybe run out of gas. We'll have to see I doubt we're even going to get there. But let's say for right now, we'll say 589 is going to be resistance. Let me update it, the bias chart. And probably to make things easier, I should just have it sitting there. And support, we're going to we're going to say support's going to come in at 467, which is about now. Now, let me flip over to the 30-minute to show you what we saw this morning. And I was tweeting it as it, not tweeting it, but sharing, talking to some people right before we even got there for support, and that whole area worked out really quite well, which is right here. We had, let me see. One thing, this mouse is too sensitive on this new computer, but that's the least of my worries. I've been having issues with problems. Like I told you, they still don't have the registry going, and on one of my trading accounts, it has me on a SIM, but I can trade from another computer on that one. But I've got other things in the issues. Also, my WizeTrade alerts, those have to be updated, and that we're going to work with a guy this morning on that. So the mouse being too sensitive is the least of my worries at this point. So I had 486 as a 38%. You can see I marked it here, and we got as low as 482 and had this 472. For support, and I'm talking because if they overshoot a little bit, I'm going to say support would be right there. Hang on a moment. Okay, so if they're going to overshoot it, and we got 472 here, I'm going to say right there 462. A little bit of a squeeze, but okay. So hang on one moment. Let's get rid of this. And I'm going to say right there 462. We got 472, but if they're going to overshoot it, so this would be for today. So we'll mark 462 as support. But this is what when I was talking to some fellows, and it was coming down here, I had 46 as the 38%, the lowest, 482, I think it was, and then this 472. So if they wanted to overshoot it, poor Anders, I think he was trying to buy right at 480, and he missed it by 2 pips, but I tell you what, he caught a bunch of this in here, and but I don't know, I don't think too many people were with me when we were trading gold in Asia. But I did post a chart for the gold and talked about the bonds at that time when we were up there. I got a little bit later this morning because I was up late in Asia trading. So for right now, we've got, so we're going to have 462 support. Let me move the bias chart. It might make it a little bit easier. Hang on. And we're going to be jumping all around this morning. Probably even think to look at the analysis on the bias chart is probably going to cover the first hour. Because, like I said, we had big moves and we're having to adjust a lot of these markets in light of those big moves. So, support. So on the euro right now, a little bit wide, but I think it has to be. I don't think we're going to make it up here. But like I said, let's say they try and goose those stocks. I don't see it happening ahead of NFP. It doesn't make any sense. But if you're saying, well, God, what if they take out that area? It's going to be 589. Immediate, if you're day trading this, then to me, I'd say the resistance is going to come at 540. And I'll show you where that is. Let's jump into the... Okay, so if you're day trading this, here's your parameters. Maybe we can do it like this. If you're day trading it, why don't we mark these like this? Try to make them a different color, and it kind of shows what your day trade parameters are. See how that looks. Oh, that's not too bad. And right here, you see right there? See the touches in? So I'd say on a day trade parameter, right where we stand right now, and that's why I wanted to not update the bias chart until we came in. These are going to be your parameters right now for today as we roll into New York session. basically 542 here. And I'm not going to mark them off because these are my overall levels, so I don't want to be putting these in. But your upside, like I said, we've got 589 if they're going to pop up, but realistically going to NFP, I think you'll see some pretty good, them taking the other side against 542 or laying off any longs. But our levels for the buy chart are going to be the 589 and 462. I think the same thing on the downside would be the 462. So these are going to be your, now let me shorten this. Don't like to have that up. There we go. So this is going to be the area that you're looking at. So let's go back into the charts. And I want to go into the gold market now. This thing changes the windows, or the option for the windows takes a while to pop up on the line. So here's the deal on the gold chart, and for those who just, joined us, I've been saying for a couple of weeks, the gold is holding up relatively well. And I'll give you how I like to look at things on a theme basis per se. I've been saying for the past couple of weeks, 2.5 weeks, gold's been holding up relatively well despite the onslaught of the dollar. And we know that, like in the back of my mind, I'll say, well, wait a minute. A year ago, after the FOMC, the gold market rallied $340 because the low was $1045 and the high was like $1378, so basically $340. And I said, I don't expect that. The dollar's on a tear. It's on an overall bigger move. Blah blah blah. It's going to go, eventually higher. I think that, but I don't believe that we're going to go, have that kind of a move. But I thought that, and I've been saying this while I was on the European crossover webinar, and when we started this, I think a move, and we even did some work on this a week ago. I think a move to 1220 is within reason. Right here, 1220. But when we did some analysis work, we saw that I think the 38% is like at 1208, and this 1211 to 1215 looks pretty solid, when you look at it overall. You see here? So I think when we did a overall, I think 38%, 1208 of the entire move or something like that. We'll have to look. I think maybe 1208 is from the election night high, which I think coal topped out at what, I think it's 1338, I believe. But anyway, we can always go back and look at that. But I remember I was like, wow, well, the 38% is at 1208, and then we've got this zone here, and that looks pretty good at 1211, and maybe they'll overshoot to 1215, so maybe it won't make it all the way to 1220, which is what my initial idea. So once again, we're just trying to put some perspective on how I've been looking at this. So then for the last week, I've been saying, this market's holding up pretty well. And we talked about support here. Remember on the way down here, we had the 61%, and I think they had come in at 40 or something like that, and we caught that really well. Then the next day, I talked about this area here, and it held the market really well. We worked higher, and since then we talked about 46 just a couple of days ago. And I know that in the news, and that's what I'm saying, you kind of keep things in the back of your head. All the rage has been about this stuff with Bitcoin, which I don't follow, but I know it's been a big deal. And so yesterday, I saw this is before Asia. I saw where Bitcoin had rallied almost to new all-time highs. It came up just a bit short. Rob says, what moving average do you use for your charts? I don't use simple moving averages. I use exponential moving averages, EMAs. And the EMAs, it allows, what it does is, the market, it places a greater emphasis, can't even talk today, holy smokes, places a greater emphasis on the most recent data. So if you have a big move, it's going to adjust towards that big move. You can see how well this exponential moving averages work. Look at that. We've been on a massive sell. We kissed the line, meaning we didn't generate a sell buy signal, so you didn't get faked out. We come all the way back down again. Now you can say when you use this in conjunction with your levels, wow, it's holding here. Now, I didn't get skunked out here, but it's holding. Maybe I need to not be short anymore. And so you can see here, it remains short, then we get the buy signal here. And the key thing is anybody can say, well, God, once the momentum starts moving, of course. But look, here's the key thing. When the market dipped, and we saw a pretty good hardcore dip, that we never generated a sell signal. You see, so you never got faked out. And so you were saying, hey, look, if it comes into 46, and I haven't, and the exponential moving average is still holding here, which it wasn't generating a sell signal, then you have more confidence to step in. And when you see this little hammer right here, which it's not at the very bottom, but it's testing the bottom, then you have confidence to say, wow, let this sucker ride. You see what I'm saying? It's from when I used to trade the crude oil market from way back in the day. I would use a 9 and a 27, but but I used to do it on like a 20-minute chart. I use 30 minutes, and I used to use 15 minutes here, but you can't see the forest for the trees. So I found it's better to use a 30 minute. So on the 30 minute, I'm using a 36 and a 108, and I don't form fit my moving averages. Basically, that's just a it's been adjusted because I think I was using it on a 2-hour, which I used to use, if people remember from doing analysis over a year ago, I would use it for the longer term move, and I was using it on 2 hours. So this has just been adjusted to that. I don't form fit moving averages to make it look like the way that I just, hey, look, going with that, and that's it. So it's 36 and 108 for the exponential moving averages on my 30 minute. So intraday, I usually pretty much look at those on a 30 minute, although I'll look at it on a 5 minute for the levels to see where the market's hitting. But for the analysis, I'm looking for the 30 minute because, once again, you can't see the forest for the trees sometimes. So we got this area here, and we talked about this yesterday, the 61%. I actually thought it was going to hit in the U.S. session, and it didn't. I thought we were going to hit it up here, and we're going to see a nice pullback, which we did see a pullback. But I was disappointed. I thought we'd get to 71. The bonds at the time got to 51.02. Remember, our bias resistance was at 51.04. So I thought they're going to skunk up the gold here, not skunk it up, but skunk the stops, and then we'll come back in. Unfortunately, they didn't. I thought we were going to get that. But we did see it in Asia. Okay, so we came up in here, and I said, no. Because I was already seeing the news about the Bitcoin. That's what I'm saying, looking at things in an overall perspective. So I said, well, that's going to give it an extra boost. And I know how these guys love to push it in Asia. But one of these things that came out, they said there was a wave of selling as it came up to new all-time highs, or came up just short of all-time highs in Bitcoin. So I said, well, that'll probably limit it, but they're still going to push it. I was really disappointed with gold at the time because I got long here, and I was thinking, okay, now they're going to push it. They're going to gun these stops. They're going to gun them. And at the time, I was even looking to sell 78. And I said, you know what? They're going to come up here to this 81, and then maybe get up to this 83, 70. This is going to be awesome. And the bonds were at 51.05, 6. Bonds even got to 51.10. Now, of course, eventually our intermediate level was 51.14. And there's a little pit stop at 08, but they got up to 18. Now, eventually when they got up to 18, that's when the gold finally boosted up here. But I was like, what the heck? I mean, bonds get to 10, and we're like above, we get to like 74.30. I knew 74 was a level here. So I already had that marked off from back here. You see that? See all these touches right here? See? Come back here for support. A build battle here. We rally, hardcore above 81. We come back to support where? 74. Okay, we fall apart. The wheels fall off the caboose, and where do they come up to? Just shy of 74. So I knew that was going to be a level, and that's one of my bigger concerns. Was like, this market is not reacting to these bonds going higher yet, you know. So, but anyway, so I thought, you know what? Where they're going to probably try and go to, I thought, they came up short. I go, is this 81.20? And I said, this is going to be a very nice zone here. Look at that. Just a lot of trading going on there. I mean, key. So my thought was, okay, they're going to make it up to 81.20. They actually made it, what, to 80? So take a look at the high. Yeah, right to 80. And we saw a nice pullback. Look at that, $9 pullback. So resistance right now, if they take out the stops, they're going to blow past this. Okay, and so for right now, I'm not talking about day trading. I'm just talking about the overall. your resistance is going to be essentially 83.70. Let's just call it 84, but it's really in this whole area here. But if they take out the stops, I think we'd go to 84. That'd be the resistance. So let me mark that off here for right now. And we'll take a look at it on a smaller, shorter time basis. Now, if you look at it on a 5-minute chart, let's take a look at here. Okay, I'm liking this level here. 76.50 is a 61%. You know how gold loves to trade against a 61%, whether on the upside or the downside. So let's go and mark this off. Oh, there's that 71.80. You see, there's my extension here. That's what I was looking for it to hit yesterday when the bonds were hitting. Unfortunately, gold came up a little bit short of that. So, doggone it. This is 71. That was a nice $9 pullback against that. Was 80. I had 81.20. And if you look here, let's draw a level here. See right there, there, and there. So that comes in at 76.90. So let's mark that off. Going into NFP, I would expect markets to kind of quiet down. So I am taking the other side here at 76.60, actually 76.40. If we can come up here, and we're going to mark this off kind of a key level here, because any rallies back up, anybody that got stuck on it probably going to say, well, let me get out, I'll get long again, once we get past NFP. So a pullback would probably take us, let's take a look. Right to here. That's not a whole lot, but I'm just telling you. So you have this zone here. So if you take the short around 76.50, 76.40, got here, so your target is going to be 74. So about $2.50. I'm talking about a day trading scalping thing. If we get up here, they're going to want to take the other side. All things being equal, we've had a rally in bonds, but now the rally in bonds is starting to fizzle, and we'll go to the bonds because, like I said, it's all playing together. Support, we turned on the gold. Let's look at where support will come in for the bias chart. That is. Let's move this back here. We're looking at 5 minutes, just kind of short. We've got 65.60 is the 61% and a nice level here. You see right in here? That's a nice little level of support. Now that's we're showing on a 5 minute. Didn't mean to do, but I'm saying it still gives us our support here. So you can see some nice demand here. So demand is going to come in at 65. So it'd be 65. You can see here, right, and I'll show you what you can see right here, where it's coming into play right here. For right now, all things being equal, right there. So probably just a hair under 65, if you look at it. We'll call it 65, Mark Snicks. So, and we're liking that 76.50 right in here. If you're day trading it, you can take a look at what the volume looks like at that time, or actually the footprint chart. So 65 would be support, with these big moves, we're having to basically just start from scratch on this bias chart. So let's go into the bond market and see what happened, because that's actually impacting what had happened here in the gold market. And was actually the driver for the gold market to go higher, despite what was happening in Bitcoin. So here we are in the bonds, and we'll look at it on a bigger scope and a smaller scope. Now, here on the bonds, I look at it on the 4-hour chart. Generally, most of my work is done on a 2-hour chart, but when it comes to the bonds, you really need to look at it on a 4-hour chart. So we talked about, remember yesterday we talked about all the significance, actually 2 days ago, the significance of 49.11. We've discussed that multiple times on the European crossover. And we talked about how well that held that yesterday. Remember we said not only did it drop back, you had this morning cloud, or whatever the hell you want to call it, because it cut. Remember, one of the things we pointed about this was that it closed above 50% of this range. So that made it very bullish, and I'll show you what we're referring to. So despite how bearish that bar was, come right there. Just that one bar right here, you see we're doing the range of this one bar, which was dark. It took out the, all this trading here. That was very bearish. And it even closed below the 49.11 right here. Bill says the peso took a big dump just now. Yeah, we'll go and take a look at those. Obviously, the big mover of the night was the gold and the bonds. But look at this. The 50% came in right here at 49.25, and we closed above it. That was very bullish, because not only we had this big dump, just like Bill was saying about the peso, but we're looking at the 30-year bonds. We had this big dump, and it cleaned out all this trading. Horribly bearish. Then we take out this key level, 49.11. You know how impactful that's been. Very bearish. And then look at the market. It comes back like a champ and closes above 50% of this range. That set it up for a bullish trade. And then we said yesterday, look, then we tested this level again, successfully moved it. And you see how, that's what I'm saying is, I don't try and say the market's going to go to 47.06. The market's going to go here. I'm just trading the levels. Now, we have targets based on if it hold. So we had this 51. Remember yesterday? And we were going off of the 30-minute. And we had our resistance at 51.04. The high was 51.02 as we came out of the FOMC minutes. And the market backed down. And then we reasserted ourselves, and here's where we came in the Asia. Now, I have this 51.14. I'll show you what I came with that right here. Now, generally, I do my levels against touches. But this 51 is a very key bias pivot from an overall bigger perspective. And we said, hey, look, if it holds here, ultimately, the market will get to 51.28 on a correction basis. Hold on. Let's see. There. We said they were so bullish here. Remember we shared this yesterday. We talked about this. I said, this opens the door for an eventual correction to 51.28. An eventual correction, okay? But the market's not going to go in one just straight direction to make everybody happy and say, wow, I got my eventual target, fantastic, I'm out. No. Where's the market going to take a pit stop? Because we got past this bias pivot here. Where's the market going to take a pit stop in between? And let me see. Nitish says, on your charts, where can I see which pair or other instrument? Can you show the pair? I'm not sure what you're referring to. It's just, oh my God, we're already well over our break. Okay, let's go and take a break, and we'll get back. We're going to still remain on the bonds. We went well over, and I want to stay to these break schedules and take another break before the DAS release. So we'll be right back. Thanks for joining us on the Morning Edge.